Can you believe Q1 of 2024 is already over? March seemed like a crazy month with so much happening in the markets. From Apple getting sued by the DOJ to the SEC targeting the crypto industry, there was no shortage of news that kept investors on their toes. In this video, let's recap some of those events. Please note that nothing in this video is financial advice and I own stocks of some of the companies we'll be talking about today. Let's begin. Let's start with the latest news about Coinbase. First, let's go back in time to June 2023 when the SEC sued Coinbase, saying that the company violated securities laws by operating as an unregistered exchange, broker-dealer, and clearing agency. The SEC also argued that Coinbase facilitated trading of at least 13 crypto tokens that should have been registered as securities. Now, there are some latest developments as of end of March. A federal judge ruled on March 27 that the SEC can proceed with its lawsuit against Coinbase. The judge found that the SEC has sufficiently pleaded that Coinbase operates as an unregistered entity. More specifically, Coinbase operates as an unregistered exchange, broker, and clearing agency under the federal securities laws, and through its staking program engages in the unregistered offer and sale of securities. However, SEC had also claimed that Coinbase violated rules by introducing a wallet for its customers. This was indeed dismissed by the judge. On the other hand, the chief legal officer of Coinbase, Paul Grewal, stated that the company was prepared for this outcome and looks forward to uncovering more about the SEC's internal views on crypto regulation. In full transparency, I do use the Coinbase platform as well as their wallet application, but I do reside in Canada and Coinbase has no such issues in this country. In my opinion, this court ruling in favor of the SEC is definitely a setback for the company in the short run. However, I don't think that Coinbase is going to have any significant impact on its business in the long run. Coinbase is actually one of the most well-regulated and compliant cryptocurrency exchanges in the US and even here in Canada. The company has a strong track record of working with regulators and implementing robust compliance measures to ensure the safety and security of its customers' assets. Moreover, Coinbase serves as the custodian for most of the new Bitcoin ETFs in the US. This shows the trust and confidence that regulators and institutional investors have when it comes to Coinbase's ability to securely store and manage Bitcoin and other assets. Coinbase stock was a bit down due to this news, but it's worth noting that it's up over 300% in the last 1 year and up over 60% this year alone. The best outcome from this lawsuit could be that you have more buying opportunities if you are looking to buy more Coinbase stock. Moving on to another major tech company facing legal challenges. Apple has been sued by the US Department of Justice in an antitrust lawsuit alleging that the company has illegally monopolized the smartphone market. The DOJ's lawsuit claims that Apple has engaged in anti-competitive practices that extend beyond the iPhone and Apple Watch businesses, including advertising, browser, and cloud gaming services. Basically, their argument is that Apple has stifled competition and harmed its users by limiting their choices and increasing prices. Apple has responded to this lawsuit stating that it disagrees with this premise and intends to fully defend itself. The company maintains that their practices have created a very unique, seamless customer experience. It's hard to argue with that, we all know the Apple fan club. They're also saying that this lawsuit threatens their ability to innovate and create good experiences for their customers. In addition to the DOJ lawsuit, Apple also faces antitrust battles in the EU due to its App Store practices. These concerns have definitely spooked the investors a bit. While the lawsuit is a bit concerning for Apple in the short run, I do believe that Apple will be totally fine in the long run. It has a very strong brand and a very loyal customer base. When in doubt, just look at how many times Microsoft has been sued over the decades. And yet here it stands, one of the biggest companies in the world and still growing. The Apple stock has been struggling a bit over the last few months. Although I would say that if Apple drops below 170 towards $160, it could be a good long-term buying opportunity. Not financial advice. It's not all gloom and doom for Apple though, because there is some news regarding Apple and Google. Apple is reportedly in talks with Google to potentially use Google's Gemini AI model to power new iPhone features as soon as this year. Apple has been a little behind in the AI race and this partnership could be a significant boost for Apple. It can integrate advanced AI capabilities into its device without having to develop the technology from scratch. As expected, the market reacted positively to the news of the potential partnership between Apple and Google. Apple's stock price experienced a modest increase following the announcement, as investors saw the collaboration as a positive development for the company's future prospects. And yes, this is great news for Google as well. If this partnership pans out, this will be a significant step forward for Google in the AI race. As we all know, Google has been struggling a bit recently in this AI age. It has been facing increasing competition from rivals like OpenAI and Microsoft, which have made significant strides in developing and deploying advanced AI technologies. As we know, Microsoft, which has invested heavily in OpenAI, has been been quick to integrate these technologies into its products. In contrast, Google has actually faced quite a few setbacks. A while back, the company's highly anticipated ChatGPT rival Bard received criticism for providing inaccurate information during its initial demo. And more recently, it's gotten even worse for Google. I'm not going to talk a lot about this because this can be a very sensitive area of discussion and I'm not ready for that yet. However, this partnership between Google and Apple can help get some of its momentum back. Generally speaking, I believe in Google long term and hold a significant number of shares. While I'm not nervous about the stock price, I'm watching their next moves carefully. There's also some other news regarding TikTok that might benefit Google. Yes, I'm talking about the TikTok ban. The potential ban on TikTok in the US has been a topic of discussion for several years, with concerns raised about the app's data privacy practices and its ties to the CCP. In March 2024, the US government is once again considering banning TikTok. They are citing national security risks and need to protect American users' data from potential misuse by the Chinese government. TikTok is owned by the Chinese company ByteDance, and these concerns are very legit. On the other hand, TikTok has ensured many times that they do not share any data with the Chinese government and all the data sits within the US. But policymakers remain skeptical and are pushing for more stringent measures, including a potential ban. So the two options are that either TikTok sells to a US entity or it's going to get banned in the US. If TikTok were to be banned in the US, it would have significant implications for other social media companies. Analysts are predicting that a TikTok ban could boost stock prices for companies like Meta, Alphabet, and Snap. This is because content creators, advertisers, and marketers will have to move to different platforms. Many don't believe that TikTok will be banned and is more likely to be sold to a US entity. But this time it all seems a little unpredictable. Let's see what happens. Next, let's look at what's up with one of retail's favorite stocks, Tesla. But before that, if you're enjoying the content so far, hit like and consider subscribing so YouTube notices my channel as well. So Tesla has been facing significant challenges over the last many months. The company's stock has been the worst performing in the S&P 500, down nearly 30% year to date. Investors are concerned about a range of issues affecting the company. One of the primary concerns is the slowing demand for Tesla vehicles in the face of high interest rates and increased competition. Nonetheless, it's going through some tough times. Moreover, people have been arguing over Elon Musk's various distractions. He has been under constant attack in the US by regulators and his pay package was sabotaged as well. Despite these challenges, Tesla continues to make progress in developing full self-driving with the release of FSD 12.3 and some other news coming out in this regard. They are also continuously working on Optimus and delivering Cybertrucks. In the short term, it's definitely tough for the investors, but for those who truly believe in Tesla, this is a great buying opportunity. I am slowly accumulating, but if the stock price drops even further, I'll be buying hard. And finally, we have the SEC going after the crypto industry yet again. The SEC has started an investigation into the ETH Foundation, issuing subpoenas to US companies associated with the foundation. The SEC's investigation also aims to determine whether ETH is a security or not. This could have significant implications for the regulatory status of ETH, the upcoming ETFs, and the broader crypto industry. There's also the letter that Democratic senators have sent to SEC Chair Gary Gensler. They are urging the agency to stop approving new crypto ETFs. The senators highlighted the risks of fraud and manipulation in the crypto markets, arguing that retail investors would face enormous risks from ETFs backed by thinly traded cryptocurrencies. I covered these two topics extensively in my last video. Feel free to check it out. We also look at the ETF probabilities and some price predictions in this video. Anyway, these were some major market events from March that I wanted to share with you all. Let's see what Q2 has in store for us. Comment below if you want to hear more about other companies. I'll be back next week. Till then, keep learning and stay on top of your finances. Until next time.